Welcome, everyone. In today's session of the Business Innovation Series, we want to talk about new technologies and innovation and how to embrace this. In banking, obviously, a lot has happened around digitization as we simply were forced to changing processes and adopting new technologies. So what we want to discuss with our panelists today is really how can we translate this into companies and treasuries, and what can companies potentially learn from what we in banking have already done. We have a diverse panel of speakers today, so I'm welcoming everyone, and I would like to start with giving everyone the chance to introduce yourselves, and not only introducing your roles in Standard Chartered, but also what your experiences around digitizations are and what maybe some initiatives have been for yourselves in your areas of the bank, so we can make it topical right from the beginning.
Hello, everyone. My name is Vinay Kumar, and I'm the Global Head for Growth Initiatives in Retail Bank. And my role, I help unlock value in existing businesses and also help identify new businesses or new business models that the bank can pursue. And I think, Marian, this is an interesting topic, like digital and digitalization, and you always say, what is it? And if you look at it, it's not one thing for me to start with. This is the way we live our lives now, right? And therefore, our approach has to be multifaceted, and that's what we see. And if I step back and look at it, it includes digitalization of existing businesses. So if I compare which is the existing businesses, products, processes, etc., and if I compare, say, 2016 and 2019, the digital sales for us, for example, is 3x. Right? If I look in another direction, we are seeing digital banks. We just announced or launched Mox in Hong Kong. We have 9 digital banks in Africa. And if you look at new account openings in the Africa, that is 3x of the new accounts that we were seeing in previous years, right? There are new business models, which I'm sure Alex will touch upon, which is bank as a service, right? I mean, I think that's something which Alex will, I'm sure, pick up on. There are partnerships models with telcos and digital natives. I'm sure people have seen what we announced with Airtel in Africa, which is live in 4 markets. And not to forget, I think we are thinking and we're investing in core capabilities that will underpin the future. So AI, machine learnings, et cetera, right? And the other thing which I wanted to say, this picture from my perspective, from a retail bank perspective, it will be incomplete if we don't talk about data and analytics, digital marketing, and client journeys and new ways of working. Right. So it's a multifaceted approach. And I think that is the most important way, is that this is not one thing. Right. And and this is where Alex, keen to hear your views and Tom's views into how you think about it.
Hi, everyone. I'm Alex Manson, SC Ventures. SC Ventures is a relatively new unit of the bank, meaning a little over 2 years, which we set up as the amalgamation of a number of different things. One, we have an accelerator. It's an innovation lab, like a lot of the corporates you work for have. That is where we run an intrapreneur program, encouraging people to come up with ideas. We've had 20,000 people registered on the platform. Thousands of ideas submitted. We don't decide which ones are the ones working on. The crowd does, and then we equip these teams with tools, methodology, a bit of money at times, but more importantly, the framework to take these ideas to the point of pitching, where they become products or new services of the bank. We'll engage with hundreds of startups every year, of which we'll do POCs, as in proof of concept, with 10% maybe, and implement, say, double-digit in production across front, middle, back office of the bank. And we run the FinTech Bridge, which is really a platform, which is a portal where we have hundreds of fintechs registered and where we post use cases, client problems, and the like. So this is the type of activities that we run within the lab. It's within the bank, and it's by the bank for the bank. The fintechs we work with become partners. We need these partners to scale. And that is the mindset in which we're investing. So the investment fund, which is the second activity we run, is really only investing in the partners that we work with. It's set up as a venture capital fund, 100 million, Series B and beyond. Our bite size is typically relatively small. But importantly, the mindset in which we're doing this is not trying to be a venture capital firm and compete against the Sequoias of the world, which are better equipped than we are as a bank to do it, but to help our partners scale. And because otherwise they're just a use case somewhere within the bank, and we need them to be a lot more than that in order to transform our bank and let alone banking. In helping them, we need to allocate a fair amount of resources, which we justify by investing, but we also align incentives by, when we tell the founder, do this, don't do that on a product roadmap, for example, they get a sense that we're in this together. And then the third thing we do is outside the bank now, where we incubate new ventures to experiment with completely different business models. The digital banks, at least some of the digital banks we just referred to are examples of these ventures. They're all startups, essentially, separate legal entities, independent from the bank, have their own management team. That management team reports to a board. Initially, we will seed fund the ventures, but sooner rather than later, we bring in third parties, outside investors. And examples of these ventures include digital banks, but also, as Vinoy just mentioned, a banking as a service business where we will plug the bank, although a very different tech stack, but we will plug the bank into someone else's e-commerce platform. And we have signed 2 partnerships in Southeast Asia. We have alluded to and will launch shortly an institutional proposition for cryptocurrency custody. We have a payments business, which is really aggregation of payments in the supply chain. We have launched 3 days ago a platform addressing the needs of SMEs in India across financial, but also all other business services, including logistics, insurance, other things. It's predominantly an e-commerce platform, which will replicate or roll out, I should say, in East and West Africa, as well as right now exploring a few other markets in Asia. We're testing at the moment a health, wealth, lifestyle retirement platform in Singapore. We also launched a credit card benefit optimization app, and so on. So there are a number of startups experiments outside the bank. And the bet we're making, I guess, is that the interaction between what we're doing inside the bank and what we're doing outside the bank has a much bigger transformational impact than either one on its own. So in other words, ideas from entrepreneurs or ideas from bankers within the bank engaging with clients and being made aware of the problem that they're trying to solve can give birth to a venture. And such venture can represent a business model, which in turn represents optionality for the bank and vice versa. So that flow of information and people sometimes and capital as well is very powerful, we think, and gives us a shot at a genuine transformation.
Thanks, Alex. Thomas, over to you.
I've spent the better part of my career at the bank and in financial markets, and I joined financial markets, not to date myself, when we were still writing tickets. So that's physically writing tickets. So I've gotten to see the whole digital transformation. But the 3 points for me is that it all starts from going from that ticket writing to that scaling of your risk. And I think that's the first step in the process, right? You need to get that right. You need to understand what your exposures are. You need to understand how many tickets are coming through, what your risks are, how you've hedged them. And that to me is the first process of digitization that I think most people have roughly gone through, and that you can't ever shortcut that process because it'll be the foundation where everything else is built upon. So if I look at our experience, the first thing you do is you make sure you manage and control your risk, and be it value at risk or be it the actual position and what your mark to markets are. That's when you spend the first bit. The second bit is, how do you scale that? And for us as a bank, how do we engage our clients in scaling and hedging their exposures? And that's been an incredibly fun part of the job. I'm always surprised by how much we can do in sort of volume and throughput, not just on a bank level, but on an intellectual level, right? When you can really sort of put an entire enterprise on a platform, and it's walk before you can run. But once you get it right initially, it then becomes a self-fulfilling prophecy where you can get more and more of the business onto that. And very specifically by that, I mean the balance sheet and cash management exposures of our corporations, and how those have, for the most part, been automated and digitized, be it through algo trading or be it through their own systems, and be it not just using one bank, but using third-party hosts as well, right, which drive costs down and increase efficiency. So that's the second part of it. And that is something we keep on dealing with on a digitization basis, knowing full well that the business model will eventually be open, and our clients, specifically for me on the corporate side, will be able to compete against the most. And then the third part of my job is when I do get a chance to work with Binoy and Alex. And Binoy and Alex have the wonderful position of thinking about the big entrepreneurial and big picture things. For me, it comes when the client has a problem or when I have a problem and I can come to them with it. So something as simple as in the emerging markets, the dearth of liquidity is a real issue. Failing on payments, not because we have not hedged our exposures, but because someone else has not received a payment for their wheat harvest that hasn't come into the payment system and it falls down. That's when I can come to Alex and Binoy and say, right, here's an idea. How do we fix this? How do we make sure we have smart contracts? How do we make sure we speak to central banks and regulators about how we can bring in things like crypto, like supply chain management, like the payment functionality that Alex talked about before? So for me, it's 3 phases. The last phase is the most exciting, but I don't think it happens without you doing your homework and sitting on the floor, as you can see where I am today. And I've had the good fortune of being able to come back into the office and keep the office functioning because the risk is quite high in what we do. It's incredibly gratifying to serve as clients, but it's also incredibly gratifying to see some of the issues at hand and how we can fundamentally transform and scale these businesses.
Thanks, Thomas. Thanks, all 3. I mean, very interesting. And as we already see purely from the introduction, same topic, but very different thoughts, very different applications across very different areas of life and the bank. But I think what we are hearing already here is no one gets up in the morning and says, now I do something very innovative, right? It's a process. It's a transformational process. And it's also a change of culture, a change of the way of thinking. And clearly that doesn't happen from one day to another, as we are all people, right? We're used to certain processes and certain ways of doing things. And Vinay, you said it's a new way of working, really. So I'm pretty sure in this world that is rapidly changing, where everyone is getting used to change, still there is this hurdle in people's head that not everyone is openly embracing new technologies and new ways of doing things and thinking. So what have some of the hurdles been that you were challenged with, and how did you overcome it, Binoy?
Thanks, Marian. And you're right. I mean, I think it is. I don't think fostering innovation or innovation is a choice. This is a non-negotiable to be relevant and competitive over time. I think, and everyone accepts that. But as you allude, I don't think it's an easy journey either. It's quite a transformation from where you have an existing business to what the future business needs to look like. And this is about not only tracking or being on top of how the consumers or customers are changing in their behaviors and context, but also transforming the way the processes or infrastructure is built within the bank, et cetera, right? And there are some very natural tensions, which you see, or we have seen it, right? I think the very basic question which you say is that should we disrupt our own business? We have a thriving business. Should we introduce a new model and disrupt our own business? That's not an easy one. Then you say, okay, so do we experiment with different ownership models? Traditionally, every entity has been brought up with the mindset that, okay, we own businesses and we have to have 100% ownership. And when you get into partnerships and everything else, it's a very, very different mindset and operating models. Similarly, I think the risk reward, being prepared to fail and uncertain payoffs, I think those are some big ones. Then you get into saying, if we do that, what's the right balance between core business and the new businesses that we have, or the new business models? How do we allocate focus? The geographic spread that we have, there's no one solution that fits all. So how do you prioritize? How do you make choices in terms of geographies or business models? I think these are some natural tensions. I mean, you go to technology, I think you can't leave technology out of this. Do we continue to invest behind existing stacks or upgrade them, or do we go for new? And not to say that this all has to be wrapped up in the investment dollars available and talent that is available. I think it's not easy. I think, and if we step back and we look at it, there are quite a few different things which matter. I mean, prioritization, making the right choices, etc., are very important here. But for me, what stands out are three things. One is very clarity and commitment from leadership and willingness to make some bets, some key bets, calculated bets, which is very important. The second one, which I think is unlocking the innovative spirit in the organization. And this is where I think SC Ventures and Alex have played a big part in the bank. I think that it has not only been a beacon in terms of, saying, okay, this is how we're going to do these things and this is how the different things organize themselves, but also they provide an opportunity to partner. For example, you run challenges, business challenges, which we will solve in partnership with SC Ventures, for example, or Alex's team. And the third is, I think, important is creating space. So there's always that core business and existing businesses, the dollars that are required, but how do you balance that and how do you still create a capacity for new businesses or innovation in the organization is quite key, right? And you need to put the best people behind that. And I think that those are things which, in my view, are critical to take away. Is that you will always have challenges, but I think you need to just think that through and get committed to it.
Very interesting. Thanks, Vinoy. And lots of important things. I also took some notes here, and I think Thomas, if I may come to you next, I think what Vinoy said is, it's not a choice. It's important to stay relevant and to stay competitive. I think that's very true in your business, in the FX business, right? I mean, you need to innovate. We need to follow our clients, right? And transform the way we do things to still be very relevant, to do things our clients want to do it in the future, right?
No, of course. It's an existential thought for us. And as a salesperson, I've heard that my job will be digitized for my entire career, right? And a large part of it has been digitized. But at the end of the day, clients will always need, I like to think they'll always need advice and thoughts and fundamentally thinking about their business and understanding their business. The clarity and commitment that Vinoy talked about needs to come through in your job as a salesperson, understanding your client's business model and where their needs are, right? And I like to think as long as humans walk this earth, there will be a value to speaking to other clients. So I'm obviously talking about my own job and what we do as salespeople, but I think that's critical. In that, though, the moment you're scared about losing your business model is the moment your business model will go away. The moment you're scared about most of the exposures and the risk which we take as a bank going online, then that becomes an existential concern for you. Thankfully for us as a bank, and I think not just for us as a bank, all banks, but we have an emerging markets platform that's really fundamental to what we do and allows me to speak to our clients and my entire team globally to open the door to what is oftentimes the corporate client base is large and growing markets. Asia, Africa, and Middle East are oftentimes the largest growing markets. They need significant digitization. They need significant work with regulators in order to digitize what is a not very digital process. The amount of paperwork that people still have to go through in operating in these markets is significant. And it's our job, and some of my greatest joys in accomplishing things is digitizing that. And that's the innovative spirit that Vinoy said. When you look at some of these issues and you realize, right, how can I make it just so much simpler for a client to be able to scale their business, to be able to increase their throughput by bringing in a bit of innovation here. And it is scary and it can fail and it can go bad. But as long as you have the right intent with the regulators, have the right intent with the client, I think as a salesperson, it's a very gratifying process. And sure, you digitize it. You take away some of the burdens from the client that you're speaking with, but it is a doable process. And I think as a bank, we've spent a lot of time getting this right, and I think we'll continue to get this right. And frankly, Vinoy and Alex really lead with regulators as well, and that's something I feel very comfortable about, that when we do have a problem or an issue, we can take it and kind of triangulate between ourselves and other institutional partners who oftentimes you do need. Our clients and oftentimes their competitors and peers, because having that bulwark there, and the regulators. And once you triangulate there, you can take that innovative spirit and make some really fundamental changes in what are very complex markets.
Thank you. Yes, indeed. I think another important topic that's come out, the tone from the top needs to be right? There needs to be a commitment from the top of the company to look into process and to be willing to innovate. And falling is not failing, right? Is something you often say along those lines as well. You need to be brave and try things out. And I think, Alex, if I come to you, SC Ventures wouldn't exist if we had not decided that this is something we absolutely want to look into. So maybe you want to comment on that one.
I agree. I'll get to this in a second, but I would put it on the table, right? If the tone from the top isn't right, then don't bother. Frankly, we wouldn't be here. I wouldn't be here doing what we're doing if you weren't for a chief executive. And it's not just the decision to get going with it; it's the multitude of battles that happen down the line. Where we can have different opinions, we can disagree. There will be tensions. It's natural. If you're going to cannibalize your own business, if you're going to do certain things, it's natural that there will be tensions. But at a minimum, everybody has to have no doubt that the top of their house wants it, and so that as we say, hearts are in the right place, which is absolutely critical. So I would say this is one of the sine qua non conditions for a transformation effort. I wanted to get back to something Thomas said, and I'm going to make myself sound a little older, perhaps, really want to be. But, when Thomas talked about writing a ticket, I had the reflex of advancing my shoulder. Because when even before this, you happened to be born in financial markets as well. When you wrote a ticket, you had to physically slip this piece of paper and stamp it. And then there would be a date and a time. And that reflex has not gone away after all the years. I also had the pink form, the blue form, and the green form. And every time the corporate treasurer would issue new bonds, we had to telex the central bank and let them know. But at some point, the fax machine came to rescue us. And so this is quick look back just to put in perspective how much things have changed actually when we talk about and digitization today. This has been an ongoing process. Capital markets have been disrupted for a long time. Between 15 and 20 years ago, I met a little startup called Market, which revolutionized the way we think of data in financial markets. This is those were the days where we started putting FX on platforms. And within big investment banks at the time, we were thinking, it's a platform coming, margins shrinking. Do we cannibalize our own business? What does it mean if we start dealing with our corporate customers on 360 and the likes? And guess what? The right answer with the benefit of hindsight is when there's another S curve, when you are on some S curve and your returns are beginning to be diminishing, and there's another S curve, jump on the next S curve. If there is a way to cannibalize your own business or commoditize your own business, do it to yourself. Not only before someone else does, but also because it forces you to get on the next S curve of innovation. If you didn't, then your shrinking margin at some point will eat up your investment capacity, and your ability to jump on that S curve will go decreasing. And that's where how companies fall in irrelevance. So forcing oneself to jump from one S innovation curve to the next is one of I guess one of the tricks for survival. A lot of this is about mindset, culture, DNA. In fact, I'd like to debunk the myth that it is about technology. We talk about digitization a lot. I think of digitization as really a little subset. And at times we say, actually, it's not about the technology, stupid, to paraphrase a better person. It's not about the technology. It's about culture, mindset, business models. It's about the DNA. So when we thought through a mission statement for SC Ventures, we called it, rewiring the DNA in banking. And rewiring does have a little digital connotation to it. But what we really meant to say is, in order to transform banking, it'll be about DNA and changing the way people operate and think and having to unlearn a lot of good old reflexes. And relearn different ways of working. I can expand on this. We say, at some point, if there's questions later, I'm happy to go into the examples of this. But how many times have we said, we tried this before, and killed an innovation? How many times, which is very well intended, do we try and put one initiative and another one together because it's more efficient, right? And my manager reflects, 30 plus years in management. When I see a redundancy, I'll eliminate that redundancy because redundancy is inefficient. The problem is there's no point going efficiently from A to B when you don't know where B is. So if you want people to figure out where B is, you may want to tolerate that inefficiency and let them work it out. And so in other words, you have to resist a lot of the temptations that come from ingrained management reflexes in order to go through that process. And then there's more to it, but that's kind of what we mean by DNA. And as you can see, technology is ubiquitous. It's non-negotiable everywhere, but it's kind of not the point.
Very interesting. So what would you say has been the biggest learning? I think Ventures has tried out many things, and it's also been a process. Ventures when you started and where you are now when you worked on so many different POCs and projects. What would you say has been the biggest learning?
It's at the human level. It's about human beings. It's in the realm of what I was just describing. Learning to deal with, it's a lot more than change management. It's really unlearning certain reflexes and relearning different ways of doing this. Not necessarily telling people what to do, but providing an environment where they'll figure it out, ideally by themselves, which is very different. Providing that safe, not only safe, but also an environment that is conducive to figuring out where we're going to go next. And it's a completely different way of thinking of the enterprise, of the way we work. I would say an element of this is about business models. Right? We are, in conventional corporations, be it a widget manufacturer or bank, where replace widget with mortgages, and I typically and historically manufacture mortgages, and I sell as many as I can to as many people as I can, as cheaply as I can in the process, and selling them for a higher price through a channel, which used to be a bank branch and increasingly is a digital banking channel. That is a vertical pipeline, right? That is completely different from a platform business model where I'm administering an ecosystem which is more horizontal in nature, where different partners plug in, and where as a provider of mortgages, I may have to be comfortable with the fact that there are a lot of other providers, and the platform is open architecture, and the ways of working are very different. Information circulates not vertically, slowly for decisions to be made, but gets disseminated as quickly as possible. Decisions are made by everyone, actually ideally algorithmically, or by everyone on the platform. So all these are completely different ways of working, but and that has to do with the fact that the business model is different from one place to the next. And the very difficult thing to do for an established, entrenched corporation.
Yeah, very interesting. I think one element, as you rightly say, is you need partners. You can't do this alone. It touches so many different areas, and in every of your areas, we also work with external partners, right? We can't do this alone. So, we also on MOX, for example, that we just announced for Hong Kong, we have interesting partners that we work with that are from different industries. What would you say are the learnings from partnering with so many different companies, but working towards one goal and doing one joint project?
Yeah, and it's very interesting, right? This question, because Thomas was touching upon this, and Alex touched upon a little bit this. This is, this is not about technology, right? And while we talk about digitalization and think of that as the end point, but in many ways, I would say building platforms is the easier part of this. It's much more about adoption. It is much more about customer benefits, customer journeys, and part of that, right? And in that sense, if you look at it truly in that sense, that's where the partnerships kick in. Because if we say that if our lives are changing, it's a much more an E-led life or a digital life, and it's a much more interconnected commerce. We need to hook into those, right? And we need to get where the needs arise. So partnering with telcos or travel companies or et cetera, or commerce companies, that's the way it is going to be. I mean, you have to plug into where the needs are. And I think, yeah, and traditional ways of looking at ownership and saying that, okay, we need to have 100% of entities, etc., is great. But it sometimes is a limiting factor, because then you are limited by what we know and what we can bring to the party. And this is where collaboration, etc., has to be. And to what Alex was mentioning, and to some extent Thomas was talking earlier, it's about a different mindset. And for me, the Mox is, in many ways, is that next generation, which is not in terms of only the proposition and the way the customer engages with the bank, but also in terms of how the proposition has been structured and what it is on offer. So yeah, I mean, I think that's the direction of travel. If you look at across different other players or what we are doing in other markets, et cetera, I think that's the way to go.
Thanks, Vinay. Thomas, I mean, also in your area, it's about not only changing technologies, but technology, it's still a lot is technology driven, but also for that you need partners. So what would you say is the biggest learning that you've gone through?
Yeah, some of two things. If we look at the Mox example, there are things that have happened in that entity that I've learned from, and I very much want to use guerrilla tactics to bring into the rest of the bank. For example, the way they deal with the client's data and harness that. It's a very different way than the rest of the bank does it. I think we have a lot to learn from them. So I sometimes keep my mouth shut, watch from afar, and actually, you know what? We should rip that up and find a way to use that and transmit that to the rest of the bank. So this entity itself has been given the freedom, and bless Alex and Vinoy for allowing them to do that. But I think we have a lot to learn from it. And for me, from afar, it's being quiet enough and humble enough to say, right, actually, let's pick up from that. The other thing is sometimes you're going to have to get your hands dirty in the digitization process. And this comes from sort of my level. And I think me and you, Marion, probably when we go up to Vinoy and Alex with some ideas, our credibility is really in getting our hands dirty with the process. It's been really understanding what's going on and where the problem is and where we can fix it and the cost and the practical terms of how we get it done, right? And executing it. And I think that credibility is critical. It's also kind of fun at some point. It can be menial, but you have to get it done in order to be credible. So those are some of my my learnings from the process. It's quite astounding how much, if you give people a little bit, can really come up with cool things. And I think Mox is such a wonderful example of that. And for me, it's just getting my hands a little bit dirty with it, understanding some of the stuff and figuring out how we can apply that to the rest of our client business.
And I would only just add that's kind of the point, right? Which is experimenting with things outside the bank, because it would be so hard to do it inside. But at some point, proving the point, and at some point, some individuals like yourselves and the more entrepreneurial and client-focused individuals, will be the first to say, "Hang on a second, I can do that. We can, in fact, we should be doing that." And by the way, this card was less relevant for the bank, or because not everything necessarily is, but importantly, import and emulate some of the ways of working and ideas. I think the use of data is a perfect example, right? We all use data retrospectively across banking and financial institutions, generally speaking, and corporates. The way we can use data today is completely different. And integrating financial and informational and physical flows in supply chains, for example, which we've talked about in transaction banking, Marion, for a long time now. But the reality is that type of use of data is a gold mine for any corporate in terms of understanding their own ecosystem better. And it's just one example of what a venture outside is doing today, and the big corporate finds difficult to implement from the get-go. But really, the whole point is to get to that. And having proven the point outside.
Yeah. Very interesting thoughts, and I particularly liked when you said it's not about technology, as many people think digitization is something technical, stay away with it, right? No, it's not about the technologies and the systems we are trying to change. It's really about the way people are thinking and how we approach things. And I think that's very relevant across industries for every department in a bank, but also for every company, no matter in what industry they are actually active. The transformation is there everywhere. And COVID has shown us that a lot has changed in the last couple of months, triggered by the pandemic situation that we've been in. But there are other situations that trigger change, right? So we are closely coming to an end already. So one last question that I would like to ask each of you, if you had one piece of advice for treasuries, how they can drive, well, not only treasuries, but I would say broadly companies, how they can drive change in their companies, what would that advice be? Binoy, do you want to go first?
Sure, Marian. And I think that for me comes through this conversation and what Thomas and Alex have been saying, and we're talking about it. I think we need to be very watchful or observant of where the customer is going, what the customer, what are the preferences, how are they doing their businesses, I think, and the clients, etc. And therefore, what that drives within our organization. And I think we need to think holistically, because digital is not the be all and end all, I would say. It's just a means to deliver, or the way the business will happen and the way the life will be led. And therefore, you have to think holistically and be bold.
Thank you. Thomas, what's your advice?
Wow, Marian, putting me on the spot. You have a problem. Even if you don't have one, you have one. I think there's always ways of doing things better, and there's always ways of keeping yourself in that heightened sense of, I shouldn't call it anxiety. We're going through rather anxious times, and maybe that's not the right word, but a heightened sense of observance and ability to do things better. And I find that in my career, in our business's career, the moment complacency seeps in is the moment you're at your most vulnerable, right? So at all times, how do you keep that going? And with digitization, you really have a problem. Maybe in some of your business models and some of the way you've hedged exposures, clients have really figured out a way to do that and something that works for their risk appetite. And I think it's okay to not have a problem there. But specifically with digitization, you can always make it more digitized. You can always make it more robust. You can always improve it. And it doesn't mean you have to have massive spend and massive overlay, but you have to kind of walk before you run and figure out the ways that you keep on improving these processes. You can't accept a manual process. I know I'm working on a manual process in order to affect some of our payments because we haven't built it out, right? And it's just, shame on me, right? I have to get that done. I have to figure out the way to get that little spend, right? So you look at your stack and you look at where you have a problem and you fix it, right? So maybe a little bit slightly bold to Benoit's point and a little bit gut churning, and maybe in an environment where we have enough guts churning, we don't need to add more stress and agita, but that would be my advice. You always have a problem and you should always try to fix it.
Thanks, Thomas. I mean, Alex, we also bring many of our clients to you into the accelerator to exactly talk about that topic. How can you change an organization? Right? But what would be your piece of advice, really, that you say the most to people then?
Well, first, I agree with all that's been said before. So try and build on it rather than repeat it. But let me just echo the previous statements. I was also going to reflect on the role of the treasurer, the role of the corporate treasury, which I think has evolved quite a bit, and it's gone from really a risk management function and efficiencies to increasingly a digitization center of excellence, where headcounts are bare bone and you're expected to handle flows worldwide and know exactly where your cash is and reconcile payments and know what's up with liabilities and everything, all pretty much 24/7 and increasing as we go from batch payments specifically to the treasury of tomorrow. And so you've had no choice but digitize perhaps ahead of the rest of the corporates. I think the next phase, I was beginning to talk about it in transaction banking, and perhaps you could see the early signs of it, but it was a little too early. But the next stage for treasuries as enabler of new business models is I would think of the treasurer as partly an architect, partly an enabler of the business models of the whole corporation, and as it will evolve. Treasurers are also the natural point of contact with banks, meaning when we engage in partnerships with our clients, as you said, visiting the accelerator, a number of people will come by the accelerator. Typically, we have a great meeting, we compare notes, and that's fine. But a subset of this will evolve into, actually, I got this problem, let's do a workshop, and let's start working on it. Today, two of the ventures that I just mentioned are joint ventures with some of our clients. So what happened is somebody visited, and we did work on a problem, and we thought initially we were just trying to do something bespoke, right? Really working on solving a client's problem, and then came out with a prototype, which we realized actually that could be a business in its own right. If it works for X, it might work for the market, and so why don't we form a JV together and put it in the market? They've not been announced yet, so it'll be a little cryptic. But ventures, new businesses, new not just ideas, but genuinely new models were born out of this type of interaction. And I think that the Treasury is a privileged place to engage on those matters. So I'd like to wish everyone good luck solving the problems, but more importantly, think of ourselves as a community of finance people within the corporate world, I guess, of the creators of these business models of the future, and ensuring that we not only cope but really thrive in the decades to come.